when we are talking about the finance, okay, there are various other forms of finance are there. People will take, now most of the people will take leasing, okay. Leasing is a very attractive way of getting the things, okay. Most of the, if you are talking about the construction business, see what is the concept of leasing. You will have the project, okay, you will have the project will be for 2 years, project will be for 4 years, okay. Project is, you don't want, you want machinery, is it right? Machinery, you want that the machinery is going to be how much? Assume that the machinery is going to be 1 million. Why you will take for 1 million? You want it for temporary purpose, okay, you want for temporary period, okay, we want for temporary. Then what you will do, you will go for a lease, okay, you will go for a lease. There will be short term lease, there will be a long term lease, okay. Long term arrangements will be used to debt finance for the assets, okay. See, nowadays we are saying, you say that there are so many vehicle dealers are there. I will give you a small example. Honda will be there. They say that I am buying a car for how many years? I will go buy for a 4 years lease. During 4 years, I will pay. After the 4 years, is it right? I have the option. I have the option to retain, okay, or I have the option to retain, or I have to option to sell. Is it? I have the option to sell, okay. All the options are there. If I don't want after 4 years, now people are doing like this. Most of the time people are taking the cars on lease, okay. They will say that they are going to pay it for 2 years. Is it? They are 2 years. After 2 years there will be an agreement. And people have that passion, people have that lifestyle that every 2 years they will change, they will have a new car. What they will do, they will give it back the old car and they take the new car. Okay, this is the way we are talking about this. Long-term lease arrangements will be used to debt finance. That is loan for the assets that are useful life over the medium or long-term period. Lease period. One lease exists for the whole useful life of the asset. Is it? We are only one lease contract, okay, for the whole useful, maybe 4 years, 5 years, 10 years, whatever it may be, but not more than that, okay. Lesser business. The lessor does not usually deal directly. The lessor does not usually deal directly in this type of assets. Is it? They will make the things through the business. The lessor does not retain the risk or rewards of the ownership. Lessee responsible for repairs, maintenance. Is that you are taking a car on lease, okay, you are taking a car, you are responsible. Anything happen, repairs, maintenance. See, if there is a condition in the agreement, fine. If there is no condition in the agreement, as per the agreement, I will put it very clear. It is that as per the agreement, okay, as per the agreement. The lease agreement cannot be cancelled, okay, we cannot cancel the lease. The lease has a liability to pay all the payments. People are taking villas on lease, okay, people are taking offices on lease, okay, they cannot cancel. If they cancel in between, they have to pay. They have to pay penalty, okay. Use the lease period is divided primary period and secondary period. Primary period is you have the rent of lessor recovers the cost. Who lessor means the owner. Is a less, okay. Next. No, sorry. Okay. Yeah. Is it? Now, secondary period, what will happen? Secondary period, termination. In the primary period, you cannot do anything. Okay. In the primary period, in the secondary period means what is the secondary period? You can have an extension. Okay, you can have an extension. That's what. Termination is allowed. Rental is normal. Asset may be sold with lease receiving most of the lessee receiving most of the proceeds. Okay, is it? let's see receiving most of the proceeds. Okay. Now, if this is the case, you will have the concept where we are talking about the lease. Most of the lease accounting will be worked out with respect to what project management. Okay. Wherever there are going to be projects, we'll use this. The length of the primary period will be vary from asset to asset. Okay. The decision to whether to lease or buy in is both a practical and a financial one. Fine. The choices are there. The final choice was discussed. Fine. We are not talking about this thing. Okay. Now this is about the lease. Another way is we are talking in terms of venture capital. Any idea about venture capital?
No.
It is there in most of here also, I think so. You have a SMEs, okay, small and medium enterprises, is it right? You have new generation, is it right? Youth, new bachelors. Take example of bachelors. But these people will have the people who are fresh bachelors, okay, fresh bachelor. They have very new ideas for the business, but they don't have money. Okay, they don't have money. What the people are there? Some people have money, but they don't have ideas. Some people have ideas, but they don't have money. Now, people who are having money, okay, they will search. Okay, they will search, and they will explore good ideas. Assume you are having a very good idea, but you need money. People will come forward and say that, okay, I'm going to provide you $100,000. I'm going to provide very clearly, I have $1,000. Okay. These people will invest for the short term. They will invest for 100,000. Next, what they will do, 2 to 5 years. Okay. 2 to 5 years. Things will go up. Business will grow. What they will do, they will sell it. These are called as the investors. Okay, these are investors. They will sell it. Khalas. Is that they'll say the value will go to, assume the value will go to $500,000. Automatically they will sell it. Again, their job is that only. They will take the risk. Okay, they will take the risk. Venture capital is a provision of risk-bearing capital, usually in the form of participation in equity, is it? Where the companies will have a high growth potential. Now people are talking about the things. What people are talking about? If people are talking about how you can use AI, people are talking about how we can use fintech. People are using how technology is going to be used everywhere. Logistics management. You are talking about hospitality management. You are talking about the Air Force, you are talking about the airline industry. Anywhere, people are using artificial intelligence to the extent possible. People will invest. Is that high risk? Okay, this is the high risk is very high because you don't know whether the project will work or not. It is they invest in the form of equity. There is a high growth potential is there. Venture capitalists provide startup, is there, or a late stage growth finance, usually for a smaller firms. Is that these people are we are talking about new ideas. Is it that they will provide what? They will provide finance for them, these people. These are the small units, okay, small person, small firms. Okay, they will see, but there is a high growth potential. Venture capitalists assess investment, they will assess what is the investment, what is the prospect, what is the financial outlook, how the management credibility is there. They will not only see what your ideas, your abilities. This is the concept where everywhere, every other country, in our own country, people are there who will support. There are so many companies are there who get the benefit of the venture capital. Okay, who get the benefit of the venture capital. You will see, they will see what is the market research, technical abilities, degrees to influence, how much we are controlling. Okay, how much, what is the investment ratio, 50-50, 40-50, 60. They will say whether they are getting any management, board of directors, all those things. They will also see what is the exit route. Is that they will see the exit route after 2 years, after 5 years. I want to exit, and it will happen. There will be exit. Venture capitalist will not be for long term at all. Venture capitalist will be maximum 2 years to 5 years. Nowadays, the life is only 2 years. Is it? The life is only 2 years. They will not go beyond 2 years. Okay? They will see whether things are working fine. If they see it's not like that everywhere you will get the profit. Okay? Somewhere there will be a losses also. Okay? This is the concept of a venture. Listen, understand this. It is going to help us a lot. Okay? It will help us. Financial impact of sources of small and medium enterprises. Is it SMEs? Now every country is giving a lot of importance to SMEs. Okay, one question will be there, 2 marks or 3 marks, 4 marks question will be on the SME. If they will give you on the MCQ, or they will give you a 4 marks question in section C. SMEs and Islamic finance. It is a sure short question. Okay, SME is tend to be unquoted. They are not quoted, listed on the stock exchange. Ownership of business is related to the small number of individuals, 1 or 2 people, family business. Financing needs are beyond the level of initial seed capital. Seed capital means initial capital. Okay, initial capital. See, seed means beginning. Okay, beginning. You are putting something below. What will happen? It will grow. It will grow as a plant, and it will grow as a tree. This is the concept of a seed capital. Okay, where invested by the owners when business is formed. Capital required to invest in non-current assets. Same non-current asset we are talking in terms of non-current assets. Okay, and in terms of working capital required. SMEs can often face difficulties. This is the most challenging one. SMEs face difficulties when raising the finance. People will not come forward. Now, this is every country government policy that they will provide subsidy there. They will provide some incentives are there. You take the SMEs here also. They will get lot of benefits are there. Is that they will get benefits. They will get lot of facilities. They don't have to pay so many fees. Isn't it? Government will support because it generates employment. It promotes people to have their own business. Okay, they face difficulties. Investing in SMEs inherently more risky than investing in. If you want to invest in SME, it is more risky. There is a lack of no business histories. They are proven track of to demonstrate that competency. Is it the abilities of the SME? That there is no scrutiny or there is no audit is there for SMEs. That is also one of the things where people will hesitate to invest. Okay, there is no internal controls are there. Okay, internal control. There is no governance, board of directors, corporate governance. It is a small firm. Okay, it is a small firm. People will find it very, 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 very risky. A lack of tangible assets. Is it the banks will also find it very, very difficult. We should not say that they are not getting the finance. Is that you give collaterals. Okay, you give collaterals. You give guarantees. Okay, bank will give the loan. If the small enterprises they don't have any guarantees, how they will get the loan? These are the things that we have to. These are the things we have to think over it. Okay. Now the funding gap, because there are above issues, there is a gap between the finance and that SME could productively use. Is that the gap between the requirement was it SME? There is a gap between the demand. Okay, demand and the supply of finance. Okay, demand and supply of the finance is nothing but the funding gap. Okay, it is nothing, it is called as a funding gap. Keep it in mind, somewhere it will be asked. Okay, a smaller companies, then these are unquoted companies. Okay, fine, read this one. Okay, read this one, it makes things very clearly. Okay, as a result, see now what they say, in order, see, in UK this system is there. Is there? In UK the system is there. There are stock exchanges are there. There is a stock exchange is there. As a result, funding gap often arises. They want to expand beyond these means of finance. They have the solution for those people who are in the SMEs. Okay, what are they? Either they go for a stock exchange or they will go for very important topic. First time you are learning, there is an alternative investment market, EIM. Okay, alternative investment market. Because see, if I am not getting funds, if I cannot list in the stock exchange, I should have an other option where I can raise the capital. In UK there are two stock exchanges. One is the London Stock Exchange. Okay, the another is the alternative investment market. People will see, people will search where we can, if they are having good potential, good markets exist in the environment, then they will sponsor those business ideas. Okay, those is called as this gap may be bridged in the number of ways. Is it? In financial investors, including angels. Okay, financial agents, people are there who only invest in ideas. Okay, they will work, they will, pardon?
Anand Doctor.
Okay, you will have venture capitalists, various government solutions. Is that increasing the marketability of the shares, providing tax incentives, any form of assistance? Is that government will also very much interested in doing this? Okay, in supporting these business enterprises, small enterprises. They are talking about supply chain, any financing is there. You are talking about the crowdfunding. Okay, you want any funding for your projects. Okay, you will pull up from the group of investors. Peer-to-peer funding, equal to equal. Okay, small savers to small investors, medium investors. So peer-to-peer means equal to equal funding. Wealthy shareholders or those available assets may able to offer personal guarantees on new debt. Is it? Wealthy investors, is it? People will provide, people will support this type of business. Is it? This type of business. That this means they are sacrificing. They are talking about the thing. The lower risk exposure for bank encourages them to learn, but also it means it is a high risk exposure for the shareholders who will give the guarantees. But people are there. That's why you say the concept of financial management is, it is only the relationship between risk and return. If the risk is increasing, the returns will also increase. It's up to you how best you are taking into consideration. Is it? There is talking about the maturity gap. Is it? Maturity gap is how you are managing long-term loans to long-term deposits. Okay. A curiosity is often with smaller business. Longer-term loans are easier to obtain than medium-term loans. Is that long-term is easier compared to medium? It is only on theoretical. Some cases it will be practical. Some cases it will work. Some cases it will not. Because the longer loans are easily secured with property. Is that medium terms are hard to obtain? Is a well-known feature of the SMEs. The banks will give what banks will, whoever is there, they will give against the assets. Okay, against the assets. Is a long-term fine. Otherwise, it is very difficult for anybody to get the short-term as well as the medium-term loans. That the gap between this medium-term loans and long-term loans is otherwise called as a maturity gap. Okay, they are giving you a reading part. See, my advice, my sincere advice to all my students are, wherever you find like this reading, it is have a look on one, at least one time you have a look. It makes things very easy, because in examination they will give you a completely different question. A question will never be repeated. When I am doing the question bank, I will tell you the same thing to you. They will never give a same question. Okay, they will never give you a same question. Means you should have everything we cannot memorize. Everything we cannot say that we are going to say. Remember, something you have to think, something you should understand, and something you, maybe in some cases, if you read everything, at least it will trigger your mind when you are answering the questions. They are talking about the role of the banks. They are talking about the role of the venture capital funds, is it? And they are talking in terms of the business angels. Okay, they provide, see they are main providers of equity finance to small businesses. They are highly selective business angels. Okay, highly selective, and normally do not invest amount. They will not less small amount. They will invest a higher value of investments. Okay, these are the things. They are how we are going to finance the SMEs. Okay, what are the government solutions are there? Increasing the marketability. Government will give tax incentives. Okay, they are making shares marketable. Is that a number of SMEs that have good business ideas and potential do not fulfill the profitability requirements to obtain full stock exchange. Now you understand the concept of a venture capitalist, the concept of a SME. Okay, they government will go here also. There is a lot of incentives for the SMEs. Lot of incentives. Okay, if you are having SME card, you will get all the benefits, maximum benefits, and you will be here we have another concept, ICV. You know this?
Intrinsic value.
Okay, these are the things which will promote. Okay, they have to do business with the SMEs. That is one of the conditions, regulatory compliance. Okay, regulatory requirements that you have to work on that. Okay, the enterprise, there are different schemes are there. There is an enterprise investment scheme, is right, with offers tax relief on investments. Is it tax relief? Means if you are talking about, if you are supporting enterprise investment through enterprise investment schemes, they will get some tax benefits. When you are going, if you have not done taxation, and if you want to do taxation, then you will come across all these concepts as such. You have a venture capital trust, okay, listed on the stock exchange, and they are similar to investment trust. At least 70% of the investment must be spread into they have to say that you have to fund to whom unquoted trading companies within the 3 years date of launch. There are very specific objectives are there. Is that every objective? Is it with respect to the enterprise investment scheme, venture capital trust, okay, share incentive schemes, okay, the schemes are designed to encourage employees to hold shares in the companies. Is it HMRC? This is what we are talking in terms of taxation. Is it? There are special forms of assistance. Is that they will provide business conferences. Is that networking? Mostly they will provide what? They will provide a platform for networking. Okay, they platform. They will give financial assistance, guarantees, grants, and loans. Is that special forms of assistance? Means the purpose is to support and develop, promote. Okay, promote the SMEs. You have an enterprise finance guarantee. Is it? They are replacing the scheme with a new one. What they say, loans can be for amounts from 1,000 sterling to 1 million sterling from period 3 months to 10 years. The borrower pay the fee to the government as well as interest and repayments to the lender. Not all businesses are eligible for a loan, and there are some restrictions. Means there are some terms and conditions will apply. Okay. Regional selective assistance. There is another scheme is there. Okay. There is another scheme. See, this is for the country specific. Okay. They are talking about the enterprise grant. Just I am going through it. Okay. Regional innovation for some specific regions. Small firms training loans. Okay. European Investment Bank, European Investment Fund. They also came up with the, this is what during the COVID to support industries, they come with some form of schemes where many governments offers extra support to the business to keep them to survive. Okay, during the economic downturn. Okay, fine. This it will not be that much assessed. Okay, supply chain financing, crowdfunding is a way of raising by asking large number of people for each for a small amount of money. Crowdfunding is a way of raising finance by asking large number of people each for a small amount of money. What they will say, assume, take an example. If they are asking $10, okay, from everyone, it is better to invest $10. Okay, it is if you are saying that $10, fine. If you are asking for 10 sterlings, okay, it is not burden, financial burden. More people will come to fund. Okay, if you are taking that, assume that you are getting how many people, 10,000 people are there who are going to come. Automatically, how much you are going to raise? You are going to raise simply without any effort. You are raising how much? 100,000. Is that simple? Is that 10. If you venture capitalist, there is a condition. Venture capitalist will invest minimum. They will invest 10,000. Some people they want to target high value. Some people will target the low value. Okay, this is called as a crowdfunding. Peer-to-peer financing is a practice of borrowing and lending between unrelated individuals without going through traditional financial intermediary. Is a unrelated, is it right? That is called as peer-to-peer financing. These are the new words which we are learning in this case. Okay, which we are learning. These are the basic things with respect to what? With respect to small and medium enterprises. Okay, small thing. There are no calculations are there. Theoretical questions somewhere they will ask. Okay, theoretical questions maybe in the MCQ or in some other way. Okay, nowadays they are very much clear about it. Especially ACCA is very clear. They will provide something on Islamic finance. Okay, questions will be there on Islamic finance. Okay, questions will be there on Islamic finance as well. Even in some cases, we take my word, it will be from 4 marks will be there. Minimum, they will give you 4 marks. Okay, what are the different types of instruments? What are the different types of schemes? And what are the different types of products and services? Okay. Is it the same purpose as other form of finance as per the Sharia laws? The basic principle is include sharing of profit and losses. No interest is allowed. Finance is restricted to Islamic accepted transaction. There are conditions. No investment in alcohol, gambling. Is it? Where we talking about that the concept of halal and haram. Therefore, ethically and morally investing is encouraged. Is that what are the main sources of Islamic project? The interest, instead of interest, what they will do, returns are earned by channelizing funds of the investment activity. Is that they will not charge interest, but they will take the things as per the requirements. Is that they say it is a management fee. There are various things. Is that murahaba? Is it a Murabaha is the trade credit. Ijara is the lease finance. Sukuk is the debt finance. Mudaraba is the equity finance. And Musharaka is the venture capital. Read it. For us, it is very important. Examination nowadays, it is a part of the activity as such. Okay, Islamic finance. They're talking about Islamic model, how it is there. We are very much concerned about what? We are very much concerned about this one. Is that in down the line you will come across? Is that while it does not generate riba, some scholars argue that it stays in the realms of speculation and should be forbidden. Is it? They say that there are so many arguments. We don't want to go into those arguments. Okay, we are interested only in the way these are going to be done. Okay, they are talking about the Islamic sources of fixed income. Okay, murabaha is that ijara and sukuk. Is that equity finance, equity mode of finance. We will discuss this. Now here they are mentioning one by one. Muraba is a form of trade credit or loan. Okay, it is a form of a loan or it is form of a trade credit. What is the difference between this and the loan is that the bank will take the constructive act or physical ownership of the asset. The asset is then sold to the borrower for a profit, but they are allowed to pay the bank over the set number of installments. Bank will buy, is that what they say? The bank will take the physical ownership. The asset is then sold, then it is sold to the borrower. Okay, then the borrower will pay in the installments. Okay, this is a trade credit. Okay, this is the period of the same thing in terms of the loans. But what will happen? What is the difference? Very, very clear difference. No penalties or additional markup will be added. Whatever is there, they will do. There is no penalty, there is no additional profit, there is no additional thing will be added. Early payment discounts are not welcome. We cannot pay in advance and will not part of the contract. Financiers may choose to give, financier may choose not contract to give discounts. Is that this is what it is called as a murabaha. Is it right? Trade credit or loan. Is it right? No. What is ijara? It is like a lease finance. Is it right? It is like a lease finance. Under the concept, banks made available the customer use of asset, equipment. Okay, and what happened? The use of the asset must be specified. The lessor, the bank owner, okay, is responsible for the maintenance. The lessee is held for maintaining in the means if you are giving the asset, the lessee should maintain it in a good shape. Okay, this is what the sukuk is it right? This is now. I think today or tomorrow, yesterday, today only I saw they are they are issuing Islamic bonds. Okay, it's sukuk. Is it right? Is it a bond? Is it right? It is a bond, financial instrument to borrow money. Is it? It is a financial instrument to borrow money. Is it? Don't give. It will not have voting rights. It is similar to bonds. They give the right. The only thing is they don't have voting rights. Okay, bonds will also don't have voting rights. They give right to profits, but before distribution profit to shareholders. Profits is in the bonds you give interest. Here you give profits. May include securities and guarantees over assets. It is secured. Is that it is bonds and it is what? It is a secured bonds. Is it? It is very, very nowadays you will come across if you are following the financial instruments, you will come across most of the governments, most of the corporates also comes up with the sukuk. Is it? All of the above prohibited Islam. Instead, Islamic bonds. See that these are called as Islamic bonds or sukuk linked to the asset, such as sukuk holder is a partial owner. in the asset, and profit is linked to the performance. So for example, a sukuk holder will participate in the ownership issuing the sukuk and has the right to profits. Is it? It is right to what? In simple terms, these are the Islamic bonds. Is it? Mudaraba. Is it? It's a partnership. It is a where one partner gives money to another for investing. Is it? It is a, when we are talking, it is in terms of what? It is in terms of partnership. Investment comes from the first partner, is a Rabbul Mal, okay? While the management and work is exclusively responsible for the other. Is it? Mudarib. Is it? Mudarib profit sharing is a when one property provides 100% of the capital. Is it? 100% of the capital to the others. Okay, in terms of partnership. Okay, Musharaka is a relationship between two or more parties. It is like a limited LLC. Okay, it is like a LLC and divide the net profit and loss in a pro rata basis. It is mostly closely linked with the concept of a venture capital. Is it? It is concept with respect to the venture capital. All providers are entitled to participate, but all providers of capital are entitled to participate in management, but are not required to do. Means there is the option. Okay, there is an option to invest. Is it? The profit is distributed among the partners as a pre-agreed ratio. This is what they say. Most of the financing decisions will be seen in, if you see advanced financial management, you will come across this. Are you clear about this?
Yes, clear.
Okay.